Most people think you need a six-figure salary to build wealth. But the truth? Just $100 a week invested in the right dividend stocks can put you on the path to financial freedom. The easiest way? If only you could make your money work for you. You don't need a high salary, you don't need to be an expert. Just $100 a week invested in the right dividend stocks can quietly build wealth in the background. Over time, it can surpass your full-time job income. Sounds unrealistic? It's not. This isn't about guessing stock prices or risky bets. Dividend stocks pay you just for holding them. Even better, many of them increase their payouts year after year. Here's the best part. When you reinvest those dividends, your money grows even faster. This is called compounding. It's like a snowball rolling downhill, getting bigger and bigger. In this video, I'll show you 3 dividend stocks that can turn a simple $100 per week investment into thousands in passive income. By the end, you'll see how these stocks could replace your paycheck entirely. So, let's get started. The first step is understanding why dividend investing works so well. Chapter 1. The Power of Dividend Growth and Compounding. It is quite simple. Companies share their profits with investors by paying dividends. Just for holding their stock, you get paid again and again. But here's where it gets exciting. Some companies increase their dividends every year. That means the longer you hold, the more you earn. Now, let's talk about compounding. Instead of spending your dividends, you reinvest them to buy more shares. More shares mean bigger future dividends. This cycle keeps repeating, making your money grow exponentially over time. For example, a stock with a 3% dividend yield and 10% annual dividend growth will double your dividend income in just 7 years. And that's without adding any extra money. This is how small investments turn into life-changing income. And the best part? It works while you sleep. Now, let's look at the first dividend stock that can help you achieve this. Chapter 2. Stock number 3, NetEase, ticker NTES, gaming and tech giant. A stock that's quietly making investors rich. NetEase. You may not hear about it often, but in the gaming world, it's a powerhouse. This company creates some of China's most popular online games, like Fantasy Westward Journey. It also works with Blizzard, bringing games like World of Warcraft to millions of players. Now, why is this stock great for dividends? First, it's growing fast. Over the past 5 years, its revenue has increased by 15.66% per year. That means more profits to share with investors. Second, NetEase rewards shareholders well. It has a 2.36% dividend yield and has increased its dividend by 43.64% in just 3 years. That's huge. But what happens if you invest? Let's break it down. If you put $100 per week into NetEase, here's what your portfolio could look like. After 1 year, around $5,200. After 10 years, it goes up to $105,600. And after 20 years, it is expected to soar over $1.2 million. And here's the best part. By year 20, you'd be earning $9,500 per year in dividends. That's nearly $800 per month just from holding the stock. But this is just the start. Up next, we have a company that's been paying dividends for decades, and it's even more stable than this one. Chapter 3. Lowe's, ticker LOW, or Low, Home Improvement Leader. A company that's been paying and increasing dividends for decades. Lowe's. If you've ever fixed something at home, you know Lowe's. It's one of the biggest home improvement stores in the US, competing directly with Home Depot. No matter the economy, people always need tools, appliances, and home repairs. That makes Lowe's a stable business and a great dividend stock. Now, let's look at the numbers. Lowe's has a 1.79% dividend yield, which may seem low, but here's what makes it special. It increases its dividends every year. In the last 5 years alone, its dividend has grown by 17.99% per year. That's massive. It also has a strong stock performance. Over the years, Lowe's shares have climbed by 13.78% annually. That means you're earning from both dividends and stock growth. So, what happens if you invest? Let's break it down. After 1 year, you can expect around $5,200. After 10 years, $115,000. And after 20 years, over $1.5 million. By year 20, you'd be earning $7,777 per month in dividends. That's a full-time income without working. This is the power of dividend investing. A steady company, growing dividends, and time. But if you want even bigger dividend payments, our next stock takes things to another level. Chapter 4. Stock number 1, Morgan Stanley, ticker MS. Financial powerhouse. A company that's been making money for investors for nearly a century. Morgan Stanley. You've probably heard the name. It's one of the biggest investment banks in the world. But here's what most people don't realize. Morgan Stanley isn't just about Wall Street deals. It makes billions from wealth management, asset management, and advisory services. Why does that matter? Because these businesses generate steady cash flow, even when the economy slows down. And steady cash flow means consistent dividends. Now, let's look at the numbers. Morgan Stanley has a 2.7% dividend yield, which is already higher than the previous two stocks. But what makes it special is dividend growth. Over the last 5 years, it has increased its dividend by 16.89% per year. That's impressive. Its stock price is growing too, averaging 14.01% annual returns. That means you're building wealth in 2 ways: dividends and stock appreciation. So, what happens if you invest $100 per week? Here's what it could look like. Around $5,200 after 1 year. After 10 years, you are looking at $117,600. And after 20 years, it goes over $2.2 million. And here's the exciting part. By year 20, you'd be earning $9,600 per month in dividends. That's almost $10,000 every single month without ever selling a single share. This is why Morgan Stanley is a top dividend stock. It pays well, it grows, and it lasts. But should you put all your money into one stock? The short answer is no. The best strategy is to build a balanced portfolio. Let's see what happens when we combine these 3 stocks. Chapter 5. Combining the 3 stocks. We get a powerful dividend portfolio. Let's look at the numbers. The average dividend yield across these stocks is 2.28%. The average dividend growth rate is 14.39%. And the average share price growth is 14.6% per year. If you invest $100 per week, your portfolio could grow to $18,200 in 5 years, $59,600 in 10 years, and over $2.1 million in 30 years. By then, you'd be earning $7,726 per month in dividends. This is the power of diversification. Now, let's wrap things up. So, what did we learn? Dividend investing is powerful. With just $100 a week, the right stocks can replace your full-time income over time. NetEase, Lowe's, and Morgan Stanley offer growth, stability, and strong dividends. The key? Start early, stay consistent, and reinvest your dividends. Over time, your money will work for you instead of you working for money. Now, it's your turn. Will you take action? If you found this valuable, like, subscribe, and check out the links below for more investing insights. Let's build wealth, one dividend at a time.